For somebody age 50 looking for a retirement account, what does this moment really mean for them?
First, let's understand who benefits from inflation. The rich, because they have a lot of assets, and the government, because it's going to lower the impact of the debt. So imagine 10 years from now, you don't pay attention to inflation, you ignore it. All of a sudden, you're going to realize that the value on paper is buying you less. Think about it this way. This 4.2% alone, if you have $100,000, in this year alone, you're going to lose $4,200 in buying power. Compound that 5 years, 10 years down the line. So when you take a step back and understand history and understand what gold does, the fact that it cannot be printed, the fact that it's a finite assets, and it's a neutral assets. Look, the strongest hand, the strategic investors are not panicking. Central banks are not selling. China is not selling. They're actually accumulating more and more because that is the collateral of their currency. That's how they want to strengthen the reserve of their books. So make no mistakes, folks. You cannot afford just staying in paper. This drop in price of gold, the same thing occurred in 2008. From the peak of March till September, gold dropped about 25-30%. Then all of a sudden it went up 3 times until April of 2011. So for some people that are in their 50s and 60s, the ones that cannot afford to be A, impacted by inflation, and B, impacted by the volatility in the market, they need to have some sort of a asset that's outside of the system. And this is where gold comes into play.